stock markets begin to get very choppy in the first quarter of 2025. Let's talk about it. Hello, everybody. Joe Werber coming at you. 2025 has not been a great year for the U.S. stock markets. While we saw the end of 2024 have a pretty big pullback in all three indices, in the beginning of 2025 look pretty promising. Over the last 3 months, all three indices have pretty much stalled. We've seen the Dow Jones have a strong 5% gain over the last 6 months, and then a loss over the last three of about 3%. The S&P is very similar, 5% up over the last 6 months, down about 2% over the last 3 months. Even the NASDAQ, which has been pretty strong, up 7% over the last 6 months, is only up 2% over the last 3 months. So what is causing the stock market to take a pause, begin to move sideways, and get very choppy? Well, number one, consumer confidence has fallen. Now, when you look at the headlines, it says it's taken its largest tumble in 4 years, and consumer confidence is falling off a cliff. Actuality, it's gone from an expected 102 down to about a 98. And if you look over the last few years, consumer confidence is right in line with where we expected it to be. But other areas of concern for Americans today is inflation. We saw the consumer price index, the CPI, inch up to about 3% at its last reading. And the PCE, which is the index that Powell tracks, inch up to 2.6% from its low of the low twos. And this is concerning a lot of citizens. People are worried that inflation is coming back. And if you look at these charts, it does look like it is coming back a little bit stronger, nowhere near the 7, 8, and 9 we saw during COVID. Add into that a significantly lower jobs creation report in January, from about 300,000 in December down to 143,000 in January. And on top of all that, we are not expected to see a rate cut from Powell at the March meeting. We don't even expect to see it at the May meeting. Powell has said because inflation is stickier than he expected, he is not going to lower rates in March, probably not in May. However, the markets are betting about 70% chance that we will see a 0.25% rate cut at the June Fed meeting. But let's talk about some positives. The dollar has strengthened mainly because of the tariffs that Trump has suggested he's going to put into place. And the 10-year Treasury has fallen to about 4.3% off of its highs. Still not back to its lows we saw in August of last year, but that is positive news for homeowners and for people who are looking to refinance or buy a house. As that 10-year comes down, we're seeing mortgage rates drop. It's becoming more affordable to buy a house. Unfortunately, as the 10-year falls, that's pulling CD rates, which were over 5%, now averaging between 4 to 4.5%, and it's pulling money market accounts down into the low 4s. Still higher than the inflation rate, which is still below 3, but falling pretty rapidly. I think if we do see a rate cut this year, or maybe multiple rate cuts this year from Powell, we will also see that 10-year rate continue to fall, which will make houses more attractive, which will hopefully boost this economy a little bit, because the economy really needs it right now, with consumers being concerned about the tariffs and inflation. But what do I think is actually happening? I think it's a pause. This is healthy for the economy. The stock market is not meant to go straight up. We're meant to go up, have a little bit of a pause, come back a little bit before we move forward. The economy is not meant to overheat. It's not meant to grow rapidly. We're supposed to see slow and steady growth. That's what we're seeing. Inflation, it's good. It's between 2 to 3%, right where the Fed wants it. Unemployment has dropped to 4%. Interest rates are falling. A lot of this is really good news. However, good news does not always get interpreted by consumers. And as we see in the confidence index, when they're not as confident, they aren't spending as much money, which could affect things going forward. But I do believe we're going to get through this, as we always do. I think it's a bump in the road. Now is not the time to panic or sell out of the markets. Now is the time to stick to your financial plan. That's why you hire an advisor. That's why you hire somebody to help you through these times, so you're not making silly mistakes when markets take a step back. We'll have to wait and see if the tariffs actually go into place. We'll have to wait and see, will Powell lower rates in June? This market, this economy could look very different at the end of 2025 than it does at the beginning. If you like videos like this, make sure you subscribe, check back every week, leave a comment down below, and as always, I'll see you next time.